everybody and welcome to Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today we want to have a look at what happened during 2016 and maybe we can learn something from what happened in this year and be prepared on what might be coming towards the next year. Just as usual, have a look at your webinar interface and you can see that small questions box. And I'd really like you guys to ask questions. I'd be happy to answer those questions as we move through the webinar. Today's session is scheduled to run for about half an hour, and right now I would appreciate a very short yes or why in that questions box to just let me know that both the audio and the screencast are working properly. All right, everybody, thank you very much. Let's get started with our risk disclaimers first thing, just as usual. So here you have our risk warning. Essentially, this says that trading of course involves risk and you should understand those risks and the instruments you are using before you're getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only. Especially true when we will be having a look at the live charts later on today. I show you some historical charts. I will show you some markets which I think might be interesting and might be presenting us with opportunities in 2017. However, this is really just for educational purpose. You always make up your own mind what is a trade that you would consider. So don't be influenced by me. We're just showing you ways to look at the markets and read those charts. All right, we do have another risk disclaimer, this time from Nadex. Just take a moment to read that one as well, if you please. Trading on Nadex involves risk, which may result in financial loss and may not be appropriate for everyone. Any trading decisions that you may make are solely your responsibility. The information presented in this webinar is for informational and educational purposes only. The contents of this webinar are not an offer or solicitation of an offer to buy or sell any particular financial instrument offered on Nadex. Past performance is not indicative of future results. That being said, let's have a look at today's agenda. We want to start with an overview of the major global events that have shaped the market in 2016. US dollar and other major currencies, index markets, treasuries, commodities, and the other global markets. And then, of course, heading over to the live charts to just show you guys what's going on in those markets right now and which markets might present us with some opportunities setting up for 2017. Just as I've said, if you have any questions, please put those questions in the small questions box. I'll do my best to answer those. The key event that shaped the markets for a fair bit of time this year definitely has been the Brexit. We had several other opportunities where the market had some big moves, but the Brexit definitely was one of the more distinct market moves. And the nice thing about this market move with the Brexit, which happened to be on the 23rd of June this year, it was a well-known event. We knew well in advance when this Brexit vote would happen. And I think there's a lot to learn from the way this market moved and evolved. We can see here, and I've already scrolled back here to the 23rd of June. Let me just have a look here. You can see 23rd was the vote. The results came in on the 24th. This huge spike, huge volatility in the market. What happened before we got to this Brexit vote? Well, we saw that the market was a little bit range-bound, but however, in the end, it started to move higher. People were very confident that the vote would be that Great Britain would vote to stay within the European Union. This was what the market said. This was pretty much what all the bookies said. You know, in England, you can place bets on pretty much anything. So the quotes for stay had been pretty high. And all the forecasts, all those people doing research and being paid good money to do a forecast of the election results, all said, sure thing, Great Britain will vote stay. However, this is of course not what happened, and in the end, after this really nice rally that led to that vote, you can see that the market completely started to fall apart. Coming from our trading strategies that we teach here at Trade with Precision, this is not a tradable setup. Why? This candle is way too large. We haven't been in that confirmed downtrend before, and so you might just think, yeah, I can't trade this market. However, once we start to look at lower time frames, and I'm looking here at a 15-minute chart, and this is the 15-minute chart leading into the Brexit vote. You can see on the 23rd, market has been moving pretty much sideways, and we started to see that short-lived rally, and afterwards it became pretty fast clear that the market, that the vote wouldn't give us the result that everybody had been hoping for. And you can see the price really started to drop lower and significantly did so. The main point for me here is that we see this down move. We saw these pullbacks here into our areas of support and resistance and into our moving average sell zone. This candle here, for example, would have been a nice trade setup here on the 15-minute chart in the morning hours in Europe here around 4 o'clock Central European time, and we would have had the opportunity here to short this market and to join this move to the downside. Remember also from last week's, from the last webinars, if this move is too fast and we don't get those pullbacks into a moving average sell zone, you might want to come even down lower to lower time frames. So if the 15-minute chart just gave us this one example here, the 5-minute chart should have given us some way more pullbacks that could have been tradable there. So the important thing for me is, if I know that such an event can take place, and it can take place with a lot of different things, usually you have, for example, all the interest rate decisions by the Fed. They have a high probability to introduce volatility with a scale just what we saw here in the market. If it's an unexpected move, so you can prepare in advance of those events. And you can see that those moves are not really that well tradable on higher time frames, but dropping down to lower time frames, like 15 minutes, like 5-minute charts even, or maybe even a 1-minute chart, suddenly those moves become very well tradable. And with those Nadex contracts available for trading those markets, it's usually a very, very nice fit that we can see here. Fast-moving markets, fast-paced options, spreads, and binaries. And yeah, binary events which move the market in one direction or the other. So this is usually a very nice setup to trade those binary news events with both spreads and binaries. So this is my main takeaway, and we've seen it with interest rate decisions this year and any other events. If those moves occur, the forecast usually isn't that well done. It hasn't been spot on this year several times, and for that reason I want to see what the market is doing first. I want to wait with my trading until the results are in or start to come in, and then just like here, then I'm looking here for my trading opportunities. And this setup here, you can see if I went short this market here under the low of this red candle here, this would have easily given me here a 2, 3, 4 times risk-reward ratio on my trades. Just think how huge that reward-to-risk ratio could have been if you had picked here Nadex contracts with a strike price of just 136 while the market had been trading at 144. These are moves and magnitudes that can really, with a decent risk protection on your setup, can only be traded with those binaries and spread contracts. All right, so that's looking back to what the market has showed us in the past, several events like that, and now the question is, of course, okay, what might be happening in the future, and which markets might present us there with nice trading opportunities going into 2017. I have to confess that I have a very keen eye on the precious metals, and one of those precious metals obviously is gold, and the other one would be silver. So I would like to start with silver today. Silver, and let's start our analysis here with the monthly chart. Silver has been in a downtrend and has started to move higher. We have seen here clearly new higher highs, and we are still about to make a higher low. That being said, if the market now starts to turn around, the 10-period moving average is already above the 20. If this establishes here a higher low and the market starts to move higher, this would definitely confirm the uptrend that we have started to see here in silver. Coming down with the time frames, the weekly obviously has already switched back to a downtrend. We're seeing lower lows and lower highs in that market. However, right now we are a fair bit away from our moving average sell zone. Now remember that the area between the 10 and 20 period moving averages is always interpreted by us as levels of equilibrium. Price is pulling back to those levels. You see here, price moved lower and it pulled back. It pushed lower once again and it pulled back. Where did it pull back to? Into those levels of equilibrium. And the idea is maybe price is about to do the same thing right now. I don't know, nobody knows. We're just trading probabilities here with those setups. We're just looking at patterns that occur more often than not. And always remember, with trading, it's not about one trade being a winner or a loser. With trading, it's always about having an edge in the market, winning more often than you lose. And if you win, you want to win bigger than those losses that have to occur on the losing trades. It's never about one trade, it's always about a large sample set of trades. So the idea here on the weekly chart might be, we might be due to a pullback here into a moving average sell zone. And that pullback could go at least now from the level of 16 where we are right now, at least to 16.88.4, something like that. You see, that's the area where our moving average sell zone starts, and it would go up here until 17.83. So might be a nice move here on the upside that could still happen if this downtrend, even if this downtrend was to continue. So let's have a look at the daily chart. And on the daily chart you can see a lot here, this recent down move, and obviously it's lower lows and lower highs that we can see on that chart. The one thing that I would like to point your attention to, however, is that we do have a so-called three-legged divergence setting up here both in MACD and in RSI. Remember that we always look at our indicators, MACD and RSI, not in the traditional way. We do not care about crossovers or what the histogram is doing and so on. What we want to see here is that we get convergence both in an uptrend or a downtrend. Convergence means if price is making lower lows, that our indicators should also make lower lows. And the same thing here, price is making a lower low, however, our indicators are making here higher lows. And if we compare those three recent lows that we saw here, you can see that every single time our indicators made a higher low. So this is what we call divergence. The downward momentum in price is currently not being confirmed by the momentum in our indicators. So 2 times divergence here, a so-called three-leg divergence, and that's true not only here for MACD but also for RSI. The big idea here is, okay, if we're seeing that weakness, we see and get this impression that the market might not be continuing lower. That's an early warning sign that this downward momentum might be running out of steam, might be running out of momentum. And the idea here, of course, is, okay, price might start to rally and to push higher, which would still be in line with what we saw on the weekly chart. We would like to see the price keeps on going higher and at least gives us the potential to pull back there in the sell zone to those equilibrium levels. So putting all this together, you might arrive at the conclusion that maybe silver might present us with some long trading opportunities over the next few days. Might not be the case on a long-term view, but even on a short-term view, currently there could be more bullish going on here for that market than bearish. Now the question is, if we're looking at this market and you think, okay, I want to trade that market, the question is, how can we trade it here with Nadex contracts? And for that, I'm now switching over here to my Nadex platform. I'm already logged in and I've already switched here over to my silver contracts. We can see here the silver weekly contracts which are available for trading, and those still have now 2 days left until expiration. And the idea might be, okay, price might start to push higher. We're currently trading a little bit below 16. So the question is, okay, which contracts, if you think the market might be rising, which possible contracts or strike prices could you consider for your trading? We're trading around 16 right now. So one choice might be to pick the 16 strike price directly. And you can see with the price being between 46 and 53, obviously that contract is currently trading at the money. A binary which is trading at the money always has a price very close to 50. So let's have a look at this one. And I'm just looking here at buying this contract one time. And guys, this is really just for demonstrational purpose. I do not suggest that this is a good trade. I definitely do not want you guys to follow me along on that trade. It's just to show you how the platform works. And if that's your idea that the market might be rising, that's a potential trade you might be considering. It's definitely not a recommendation on our side. I will be placing trades in that direction, in the other direction, just to show you how everything works. So please, just because I put on that trade, it's not a recommendation. All right, I might considering now buying that option contract here because I think price might be rising. And what is my maximum loss? Well, I would be buying this contract now for $53.25. Remember, binaries always settle either at 0 or at 100. So if silver is trading at the expiration on Friday above 16, this contract will settle for 100. And for that reason, my maximum profit would be 100 minus what I paid for it. And this is here my maximum profit, 46.75. So I might just place that order. And you see that trade is already live, already has been filled, and that order is working. Now, what can I do with that order? Actually, I have multiple options with my option position here. One thing might be that I just say, okay, I'm pretty sure it will trade above 16. I will do nothing. I want to have the full payout, and that's it. Or what I could do is just to say, okay, I might be inclined to take my profits early. So if the market starts to move in my direction, I want to place a limit order and close that position early on. Yes, I will not be getting those complete $100, but on the other hand, if the market starts to spike higher, I might close that position or a part of it, and if the market then reverses, I still would have locked in my profits. So why not raise an order right now to say, okay, I want to sell this that contract, that one contract, but I don't want to sell it right now for those 46. I think price might start to move higher, and I think maybe I will be getting a price of $75 per contract. So I'm just raising that order right now. And you can see I have this limit order sitting here and waiting. Nothing left for me to do if the market starts to push higher and gives us a price on that option, a bid of 75. I would be closing that contract then. Nothing for me to do, and I'm taking my profits early. Nothing wrong with taking profits early. Now, another idea might be, well, I'm now risking $53 to just make potentially 46. That's a reward to risk ratio which is below 1. Usually I want to have a better reward to risk ratio on my trades. And so the idea might be, okay, I maybe don't want to take that 16 trade, 16 strike price. I might be more aggressive with that setup. So why not look at the 16.50 contract? Remember, at expiry, silver would have to trade above 16.50 in order for me to get my $100 payout if I go long that contract right now. If it's just trading 1 cent below 16.50, those option contracts would settle at 0. I wouldn't get anything. So why not consider buying this contract here as an example and if I want to risk again pretty much my 47, let's risk $63 here. I could be trading now 4 contracts. I would be risking $63, and my maximum profit with 4 contracts, 4 times the payout of $100 minus what I paid for it, $337. So you can see this is a much better reward to risk ratio. That's about 1 to 6 or 6 to 1. And for that reason, much better reward to risk ratio. However, the probability that this trade might be a winning trade is definitely smaller than the one that we saw before. Remember, price would have to spike higher to at least 1650 at expiry, so that that option would be worth something. Right now, you might say, okay, doesn't sound unrealistic, could be fine, could be working, so why not place that order? All right, so let's just do that. We just place that order, and you can see the position is already on. We have 4 contracts, and one way you might consider to trade this is, okay, we now paid just $15.75. Why not close half the position once that option would be trading maybe at 31? And those other 2, we will take those until expiry and see what might be going on there. So we have 4 contracts right now, and I will be initiating a sell limit order here, and I want to sell 2 contracts once that option would be trading at 31. So I would be just scaling out of my position. Closing 2 contracts at 31 would pretty much put my complete position at 0 risk, with still 2 contracts pretty much going for the full upside potential. So you can see that order here is working as well. That's one way to trade this market here to the upside. Now you might say, okay, I'm not that convinced of that bullish position going on here right now. I would want to be short that market. Perfectly fine. Why not have a look at commodity spreads? Right now we have been trading binaries, and I want to switch to my commodity spreads. And he doesn't like me. Sorry, something seems to be wrong with my browser right now. Yeah, sorry, no commodity spreads, but that's not a problem. So why not have a look at initiating now a short position here with binaries on that market if you think, no, that pullback here might be over, and your assumption is we will see a retest of those old lows here. So where are those lows? Let me just quickly switch back here, and we can see those old lows have been at 15.65, something like that. Coming back here to our Nadex platform, what we can see here is 15.65. Why not take that 15.75? We could be looking at selling that contract. Now, this contract is very close to where we are trading right now. It's in the money, but it's still quite close. So if we were to sell that contract 2 times, we would be, our maximum profit would be those $69 that we would be getting right now 2 times. If the auction settles below our strike price, we were to keep what we got when we sold those contracts. So here, those 138 that we will be receiving right now, that's our maximum profit. What is the maximum loss? Well, we got $69 per contract. If that option settles above the strike price, then the payout is 100. We have to pay 100. We got 69, so our risk would be $31 per contract or $62 here for 2 contracts. If you think the market might be going down, you might consider placing here a trade to the downside, just like that. And you can see that order is being filled, and we're already waiting here and for price to come lower. This is now very close to the money. Just like the same way we have approached this setup when we looked at the long side, we could now also take a trade which is even further in the money. Of course, price has to travel then further again for our trade setup to actually work, but the reward to risk ratio would be much better there. So let's have a look here at the not 1575, but if you think price might even start to make new lower lows, you might say, okay, why not have a look at the 1525 contract? Looking at this contract here, selling it once, your maximum profit would be, you were to keep those $93.50 that you have received when you're selling that option right now. Your maximum loss would be just $6.50. You got $93.50, you would have to pay out 100 if it settles above it, so that's your maximum loss. Replace that order, and that order is live. Keep in mind, price has to travel quite a bit. We're trading currently a little bit above 16, and price would have to come definitely much lower to hit this the strike price at 1525 and trade below it at expiry. Just at this strike price is not good enough. Just 1 cent above it is not good enough for your short position. You want to have that position here to the downside. All right, any questions from you guys so far considering the analysis on the silver market and further the way I have picked those different strike prices, the advantages of those individual positions, scaling out of those positions? Is there anything where you say, okay, could you please explain a little bit more what you thought when you did it that way? And while you guys might be typing those questions, I would quickly switch over and have a look at gold. Gold, of course, has been going pretty much in that same direction as silver, but what we are missing there right now is really this clear three-legged divergence. Gold looks pretty much, looks a little bit more bearish than silver right now. Another way to trade, definitely far too advanced for this session right now, might be considering to trade the spread between gold and silver, going long one options and going short the other ones. Just to give you some ideas on doing your own research and getting started there. Well, obviously the overall picture here is pretty much the same thing. Gold here clearly made a new lower low here, so the monthly is already more bearish here on this setup, and the weekly obviously as well. You can see on the weekly we have definitely a much larger way to travel back here into a moving average sell zone. So if you're speculating here on a recovery, that move might be larger, and why not look at those same options here in gold that you did or that we just watched here on silver. So that's the big idea here. Just seeing if there are any questions, but I think we are good for the moment. All right, so let's have a look what those positions are doing, and by all means ignore what the profit and loss is doing. Just examples, just for the sake of demonstration. And let me just have a look here. Just a second. All right, so if there are no more questions from you guys here right now, then I say thank you very much for tuning in today and spending time with us here on Nadex. That would be the end of today's webinar. I hope you enjoyed this webinar. I know I did. I hope you've learned and heard something new and useful. Pay attention to those binary events. Big news moves the market big time, or has the potential to move the market big time, and focusing in on those moves might be just the perfect opportunity to trade those setups here with Nadex contracts. Remember, you have different expiry cycles from very short-lived options to longer term ones. You can directly pick which time frame you want to trade there and where you can see that the market is moving. If you want to learn more about the way we look at those charts, please sign up for the Nadex Advanced Education course and the webinar series here at Nadex, completely free for you to attend once you have opened that account here at Nadex. It's easy to get started with trading binaries here at Nadex. You see how to be in touch with the exchange, visit the website, open a demo account, and you see how easy it was to place those trades and open positions and scale out of those positions using the platform. Get used to it. It's just sign up for this demo account, practice. I think 15 minutes should be fine, and should be plenty of time to get familiar with how the platform works, and then you're good to get started with your trading. So if there are any questions after that webinar, please give Nadex a call, send them an email. You have all the details here on this website. And yeah, as usual, after this webinar, there should be a short survey. Any feedback that you have for us would be really appreciated. We do those sessions for you, so please let us know what you expected and how we can improve. So everybody, thank you very much for attending. That's it for me for this year, and I hope you all have a very, very successful and happy New Year 2017. And of course, most of all, happy trading,